Hello, it's Brian Downing, um, showing you some interesting stuff. Uh, what I've been working on for the last 3 days, it involves kind of like a trading system, and basically it's involving a trading system, high frequency trading, somewhat like HFT like, and taking the ability for the Python trading bots and convert them into C++. So let me go back to the screen here. Okay, so what you're looking at right now is I'm going institutional, and I'll soon be charging institutional level pricing. So this course will stay on at this price right here, 249. That will be going up to $5,000 in the next within the next week. So if you want to learn the foundational, what I'm talking about, this is you have to jump on this now. This is it, no more. So all my institutional level, and you see why. Give me a little bit to show you why. So this is a course, 26 modules over 26 days that will show you how from the start of futures and options all the way through building out some very sophisticated strategies as a trader, which that is also great for career as well for portfolio management. Okay, so let's talk about the system that I've just kind of built out. Okay, here it is. This thing is very powerful. Okay, Um, this will not be released to anybody. I may do something kind of like different. Um, and also, this is built 100% and only for rhythmic trading. So if you're trying to do things like single stock, on options, let's say, this is not for you. This is purely for futures, CME level, ICE, exchange, plus the options on those futures. Okay, I've gone on enough in the last bunch of videos lately, but you can see here 279 trading bots, strategies, call them what you want. Plus, everything's all unified into one. This is a JavaScript front end, okay, with an HTML, obviously. And then on top of that, we've got the code behind of the C++. I'll show you some coding examples of what we can do with this. So you can see here we've got on this particular strategy, the metrics on the performance using real world market data from Rhythmic. Okay. You get the equity curve for the last, year and a bit, risk score on how well this is scoring on different types of metrics, namely Sharpe and Sortino for volatility, the win ratio, and the max drawdown. This is all portfolio management. I keep saying anything less than 15% is really to run with because the risk is not so much. Okay. So here's the AI plan. And what you can see, there's the estimate and the actual. Okay. And the difference between the AI and actual, it's pretty big. Okay. There's a commentary on what drives this strategy and the trading rules generally as well. But these are the important things right here. Because we're now already entered into that highly volatile market, which is unpredictable, on top of where everything, right, pretty high probability, everything's going to go range bound, a very tight range bound environment for the next year, 2 years. Okay. So that's going to be making it more difficult to trade. So here, the volatility regime is moderate, which is good, and the trend is fairly bullish. Okay. Based upon equity curve. I'll show you another way of looking at this. All right, so that's that view. Okay, so I want to show you one report here. So here we have our pre-market analysis PDF. I've shown this before. This has become very important for me to include a liquidity high volume test. So when you see this report here, I'll be making this available on the that new website, the orderbookedge.com. So these are what to trade, right? And basically, what to trade is for copper long and all of these strategies mentioned here. Okay, I think there's like three or four. So we have a total of four. We have the first one, and then we have three more as supporting. Okay, then we have Bitcoin shorts, same logic. We also have the news drivers as well, plus the precious metal. In this case, it's a gold short. And this was just generated like a few hours, like earlier this morning. So this is fresh data, fresh outlook. Oil long, okay, because we know what's going on in the Mid East, right? So we know all that. So that's the focus on what it's recommending for today, okay, before, like pre-market before it opens. So one thing you need to understand is what you need to understand is that this is kind of like day trading. If you're starting with a small account, you have the margin requirement in futures, which can be quite a bit of money. For the day, it's fine, it's low, it's affordable. But once you go past 5 o'clock, then what they'll CME will do is say, oh, we're going to switch you over to overnight margin requirement. And because of that, you better have a large enough account to handle that. On top of, are you willing to take the risk in case something happens overnight on oil or something on overnight trading in Europe or Asia? Okay. Well, typically, you probably don't want to go down that path. So you kind of want to liquidate before the end of market day for Chicago. The other thing is if you do get liquidated, um, yeah, you also have to pay very excessive liquidation fees as well. That's all on the exchange level. Okay. So that's very important to understand. So from there, with the recommended list that I gave you, like the long, sorry, what was it gold, oil, copper, and Bitcoin? Here are strategy bots. So today, these are the recommended strategies. Again, all of these currently exist as I've shown before, all in Python. Python ready to go. And you can see here what to go with what, and they're all there. Okay. So then I can deploy the bots. And here's the key part, the very brand new capability. I'm gonna hammer on this. We're now able to convert or transpile from the Python to C++ 20. Okay, executables and all will run. Okay, and I just want to show you one example of this. So I could do this for all of these strategies here on top of I can out of two, 300 or whatever there is, I can convert to one uh one bot I can convert from Python to C++. Here's an example. So we do have the process. Where is it? Right here. So this is the process of doing it. Now, here's the thing. I can only do this in Windows, and it's not because if you're going to go with Rhythmic, which in this case you really and you want to do C++, you can only with C++ with interactive brokers for the affordable API fee, it's Windows only. Same with C Sharp .NET. But if you want to do Python with the protobuf, which I have done and works, here Windows is only an option that Rhythmic has. On top of that, with this in mind, the um, the C++ can be ported over to the higher end API, which is the Diamond, very expensive. You're getting in the thousands of dollars a month. And I keep saying, for true high frequency trading, which is really where are you operating? Where are you trading in? So if you are in CME, you want to be in the Aurora data center owned by CME, and in there you can get direct market access, and you're going to be paying thousands of dollars a month for that privilege. You can also go in via the CME, sorry, with Rhythmic, but that's the higher end API, very expensive. And you can't do that unless you have 500,000, maybe 250,000 get away. But a lot of people, I haven't yet seen anyone willing to do that at 250,000 at all. And you pay thousands of dollars. So you have to have 100% a C++ and let's say strategy through Rhythmic that will make you a lot of money and guarantee you that. Okay, for the extra data fees and all the CME stuff that comes with it. All right, so the conversion is pretty simple. It takes like a minute, and you can see what it's doing here. Here's all the files. I'll show you that in a minute. Okay, so we're now dealing with this folder here. So let me just copy it. Okay. So I'm going to show you some of the code and everything that comes with it. Okay, here we are. So this is what we just generated. Okay, this will run. Let me just see. Yeah, so you can see here. Let me just pull it up. So you can see here, it's waiting for the server access and then be able to start trading all the trading rules. So it runs with zero errors. Okay. So that runs there. So thing is, we have the source files now. So we have the build process here, again, using Visual Studio. And then we have the source files. Okay, we have the main. So I'll just bring up Sublime comments, some of the things you need to set up. Um, one thing I want to highlight here, very important, is there's no third-party dependencies at all. None. Here's why. This is using standard IO from C++. Okay. And then after that, I've purposely, as part of this build process, it will build out everything else on its own to have zero dependencies. I do that because it forces the process and makes the build a lot easier to build out successfully. Again, this is just early days, but so far I'm really surprised that I can do this. And then it will force the AI to generate code for all your algorithms. So I'm going to show you some examples here. So we've got our headers here, right here. So these are the ones we can look at. So this is the main, I believe. Yeah, this is the main. And you can see here, it's not no surprises here, just basic standard IO stuff, right? And again, I got to really highlight this so people get it. Okay, if you are coding manually as a hand coder, this right here, and this was built with GLM 5.2. Again, a cheap but very capable AI model from China. Okay, this thing has now made you what you do as a job, as a career, it's pretty well put it to a state where it's pretty well game over for you. Okay, because many companies can now do this. Um, but when it comes to GLM, what happens is as it can do the full debugging on the level of Opus 4.8, no questions asked. But the problem is, as your project gets bigger, then it's not capable of handling the whole project in let's say in VS Code or whatever your editor is. So you have to kind of be forced to go back to the Claude to kind of like complete the job. So 25% of the whole process was done with Claude, and I kept it with Haiku 4.5 to reduce the cost. Okay, so the whole process took 3 days to get it where I'm showing you now, at no more than 200 bucks. Okay, so that's what I'm saying. Like your value is pretty well zero. Sorry. But there are always the Luddites out there, the horse and buggy people that will do whatever it takes to keep their thing going. But I can tell you right now, you don't have like I could go on about it, but you don't need to uh, go down that path. Okay, if you're going to go into the quant field, I think over time a lot of these jobs are going to die, are going to wither away as well. That's just my opinion, and I don't need to show because I'm just showing you an AI generating very good optimal C++ code. Okay, you can reverse engineer it, and that's fine for career. You could definitely get away with it. But you can see here, um, it's good quality code. Okay, I'm sure you could probably hack it apart and say, "Oh, I can get it better." Nobody cares. Okay, I'm going to be honest with you. Nobody cares after a certain point. So let's take a look at the strategy code here. Again, all standard IO. We have our own custom uh, code for the strategy itself. Okay, nothing fancy here, but very, very efficient, highly optimized, I think. The other cool thing about it is if you do want to get into quant, you can use this to reverse engineer your code and then go into chat mode. If you took my HFT code.com stuff, that will walk you how to do that. You can learn on your own. You don't have to memorize all these dumb websites and get other people to do it. The AI is cheap enough and sophisticated enough to do all that for you. Okay, if you want to talk to somebody, you be my guest. But if you want to do it on your own, on a very low cost, with something like start with Claude, if you're fairly new, but you can do the equivalent with GLM 5.2 currently. Today's July 10th, just so you know. And at the same time, you can use not the Claude code, so you're tied to the Claude code or the Anthropic models. If you use something like Cline, CLINE extension, that will open up your world to pretty well every model out there, uh, LLM provider. So you're not tied to one vendor, like LLM model provider. Okay, and then you can flip between OpenAI and Anthropic, and then use some of the Chinese ones, whatever you want, and save money there. But you can see the code is very, very advanced. Um, yeah, and as I said, you can learn from it too. You just reverse engineer it and just have your chat with AI, and that's the key. Is you got to know how to prompt as well. All right, and then let's take a look at the headers. You can see here. Let's take a look at this one, strategy. Okay, um, and you can see in here all of this fun stuff. Okay, so here these are built by the AI. All the algos, the whole nine, all the rules are built by AI. Very optimal, very efficient. And this was created by Claude. I believe I did spend the money on Opus to make it the best. I mean, I'm not going to use Fable because I know it's just going to yell at me and tell me what's wrong with my code. That's what Fable and the 5.0 is good for. But overall, you can see how good the code is. Okay, and you get some little comments here that are pretty useful. Okay, let's continue along here. We have a Black 76. So everyone thinks that Black Scholes, for whatever reason, the one chosen here is always Black 76 when it comes to options. So we have our Greeks, we have all of our basis mathematical processes, plus the tables or the internal um, PDF arrays. I don't know what the data structures are for these, but yeah, don't spend your money and waste your money on other dumb things out there. Okay, here's the indicators as well. Okay, it's dependency free rolling indicator math helpers. So we have here now. We know this is pretty efficient, like low latency level stuff. The ring buffer, okay, and it's pretty efficient. Okay, and the normalized PDF as well. Okay, and that's from again the original trading bot as well. I could probably make this a lot more efficient, but for now it's fine. I'm happy with it. I don't want to split hairs and trying to make it faster because this is really going to boil down to just medium frequency. Be happy, be less, not so stressed about it, but very valuable to reverse engineer and learn on your own. Okay, so there's that. Let's see what else we got. We got Redis. I still use. I don't like this WebSocket stuff. Every time I run it, it just doesn't run under load. So I just continue using Redis. It's free, an old version of it. It's very dependable, 100% successful. And then I've shown you that as well. Okay, so pretty powerful what capability here. Again, I don't think I'm going to release this for anybody as well. But to be able to do this process and have AI do this, it's just mind blowing that we can do that. So in here we've got again the dashboards. These are some. I don't know if they're very useful right now. Uh, these are the older dashboards I've shown before. It could be useful for people. A symbol list, so CME and CL and 6R or whatever. So there's that. But this is another nitty gritty that's very, very powerful. We have here the engine as well, the C++ component. When I run everything and turn on the Rhythmic server, data come through here, then the market data and orders. I could probably somewhat um, showcase metrics from a portfolios level in another HTML presentation because you want to have less load on the C++ server component. All right, so we have that. So we have the bot manager so we can independently run these as is. So that will affect the C++ engine level. All right, so these are the old reports I've shown before. So showing you the pre-market analysis, okay? So here we've got the trading folders, and this is like a variety of PDFs, very deep, very analytical, can overwhelm. With this spreadsheet I've shown before, we've got here the bot ranking based upon backtesting, real market data, and it's always from the freshest point on when this stuff gets generated. Okay. So if this is generated July 9th and anything that has all that back testing will be that from that times that time frame. Okay. So in this case, July 9th at whatever time. Okay. Same with the back testing as well. And then we got some other little bits and bobs reports as well. So let me just, in case you're new to all this, is what I can show you. So the first one here is, I'll just do the most recent here. So we've got here a bunch of files. I've shown this before in um, previous videos. Okay. So let me just show you this file right here, this XLS, which is obviously Excel. Um, so let me go to my download right here. So here's one example. Again, this was last 24 hours. I've shown this before, okay? This is how deep we go. We go all the way back, creating this whole thing since mid-April, 2 months ago. So here we have 271 bots. These are the profitable ones, okay? So in there you might see XRP that might have made, I don't know, a couple of bucks, okay? 70 cents. So it's technically still profitable, but these are all the profitable. The darker the green, the better. Okay, I've gone over the details of this. So I've also talked about Gen 1, Gen 2. The difference between Gen 1 and Gen 2 is you have your original creating bot created in Python, and then it goes through another process to create the Generation 2, where, as I said before, and this is very critical for people that may watch, if you go into my website here, just go under quantlabsnet.com, come under here, more courses. This little course right here, this is the only course I'll be putting out there. This is a caveat, just so people know. This is very foundational to get me to where I'm at today, to be able to kind of talk about futures and options. Here, that price, 249. Within a week, this will go up to $5,000, okay? Because we're now gearing up everything I'm showing you for institutions, okay? We're not doing this for tire kickers anymore or people that no, we're going premium pricing, okay? Now that I'm showing you the software platform that, that does trading 100% AI, that makes the whole thing more valuable. Okay, so we have that 26 days, blah blah blah, $5,000. So now you know. So out of that, we've got 400 trading strategies, trading rules, institutional level. That course only does institutional level stuff for futures and options. Okay. So out of that, 400 trading rules came out of that, and they get applied to each and every Python bot that gets generated. And that becomes a second generation or generation two trading bot. Okay. So we can have a futures and options strategy. We can have a futures only strategy. We could have a short only. We can have a long short. Okay. So it just depends. And again, we're doing the auto back testing as well. Okay. So here, um, basically that's it. It's a very powerful spreadsheet. Again, I don't release this to people because they get overwhelmed. They go, oh, I don't know what to do, blah, 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 blah. Fine, fair. Okay, so there's that. On top of that, what also matters, everything is driven by news. I've shown this as well. So we have the news, the positioning, all of that, and that's done for the day. And trading bots come out of that. So we're always creating new trading bots and automatically ranking them based upon performance over the last 2 years of back testing, plus more putting more stress on the last 90 days. Okay. So that has not changed. The other thing, this is where the trading rules that get applied, those 400 from the institutional level. Let's see if I can. So here, what we're dealing with is quite a bit. So what kind of trading rules? We got risk unit, sizing methodology. We've got capital efficiency boundaries. We've got edge qualification criteria, exit triggering methodology, season risk limits, trade initiation criteria. This is what the institutions do, and the retail market would never consider. Okay, and trading psychology and execution, performance and audit methodology, blah blah blah. 400 rules. Okay. On top of that, we have here the option chain analysis. Let me see if I can pull up an option chain here. I don't think there was any. I couldn't download any option chain because this is generated outside the market time. But I've shown this before, and it did show a chain with the puts, the strike, and the bid and ask basically. Okay, so there's that, and those are chosen. Whatever's available at that time, it will always go in and choose the most optimal chain. Okay. We also got the back test as well, but that's a special download. So we have this with a spreadsheet, and then there's this. These are the back testing reports. So I've shown you a sample of a spreadsheet, but this is also a very important one. I don't know. I don't know if I've shown this. Yeah, I think I've shown this before. So let's say you had this amount you're starting with at this period of time. Let's say April, March 2026. You have $5.3 million. You have now 291 bots, strategies you're only going to focus on, which is a lot. The return that you'll get is expected at 2.3 million within a few months. So on average, you're going to get at least a 50% return. Average Sharpe, average win ratio, and all of this fun stuff. But this is the important part: the average max drawdown. Okay, and here you get all the metrics I shown before in the browser under here. Okay, so this is just here, but you're seeing it now in the PDF. Okay, let me just get back to this. Okay. So yeah, so this is just different than the mechanics of it. Now people go, well, that's AI. Well, not necessarily, because if we start looking at the strategies themselves or the bots, here's the same summary I showed you before in the browser, some more data. Um, but here's where it gets very interesting. Oh, let me just talk about this as well. When you take a look at your Gen 1 versus Gen 2 trading bots, don't think it's in here. It's in that spreadsheet here. This is the difference between a Gen 1 and a Gen 2 trading bot. Okay. Here, you can see this is the date. We have here some dates that will go back to mid end of April. Okay. This is performance based upon real market data. Okay. But it's a Gen 2, futures only, trading on the Micro NASDAQ. Okay. That's a Gen 2. Okay. That's a fairly, that's end of June 22nd. Today again is July 10th. This could be an interesting strategy right here because this was created at the end of June. Okay, so that's using Nasdaq volatility mean reversion. Again, this is the kind of strategy you want when it comes to a highly volatile strategy, and it's mean reverting, and it's not momentum or trend following type of strategy. So this has been doing kind of well since the end of January. So this could be a valuable bot. Futures only, And here's the performance for it. Okay. Let me just see if I can highlight this. Yeah, right there. Okay. So you can see here, total P&L, $1,400. Average return, 9.92, which is pretty good in this day and age. Sharpe ratio, 1.66, not bad. Win ratio, 65%. Sortino. Now, I don't know if this is, it's probably highly optimistic because it might be AI projections, but this is what I want to show. So for the last 3 months, it's been profitable for 2 months. Okay. And that's got a very strong A plus grade. And it meets all of the different filters that I apply. It's about 20 of them. That's one of those rare strategies. So I'm going to keep that open. And in our other backtesting PDF, the monster PDF, as an example, this one. Okay. So we have all of these strategies here. So I am going to pick off this Micro NASDAQ strategy and show you the backtested results. Okay. So this could be a valuable strategy because it's mean reverting. So we want to go to here. Yeah, so we'll do a search. There we are. So this is now the back test for 2 years. And this is what it looks like. So this is the there's the general genesis of what's driving this strategy. Okay, it's a long only. Actual result 12%. Okay, so that's using real world option data, option chain data. Sharpe ratios, this is more measured. 1.88. This one I believe. 67%. Remember, this was created at the end of April. So it's doing quite well. And we'll see for sure. Win ratio is 67%. Profit factor is 2.63. Okay. Sharpe ratio, pretty good. Win ratio again, 67%. And a max drawdown of 5.3 is very low. And all the other fun stuff. But look at what's done. So here it's done not great last year or earlier this year, but look at this. It's done very well. It's going through some challenges, but it's starting to pick up again. And here's the returns for each month. This is very critical to know. You can see it had a very strong April, very strong May, but it's performing quite nicely in July. We're only 10 days in and it's still doing pretty strong for that month. So you're looking at really strong months, like 12%, 10% months. So we're already at 2.5% over 10 days, or yeah, 10 days in July. That's a pretty strong strategy. Okay, monthly rolling Sharpe and blah blah blah. This is the key again. For July. So it's made a couple $100 there. But look at the amount of returns so far for April and May. So this had a very weak month, and you may not have traded it because all the pre-market analysis say no, don't trade that. But look, it's trading really well. And because I see that in the name, that it's a mean reverting strategy in a volatile market, and it's doing really well for July. And again, that's real world market data. This is a champ strategy. Okay, this would be a highly priced strategy. So let's go back to this. So let me see if I can find that strategy here. So there it is right there. Let's see here. So I could transpile all available bots. So that's currently in Python. Click that, and then I get my C++ equivalent. Let's do that. Okay, so see if there is a bot for that. But you get the idea. Yeah, so we can definitely generate a self-contained trading executable that's ready to go to trade uh in the Rhythmic or CME via Rhythmic with everything there built in as a show with the C++. Pretty nice. That's pretty nice. And this is where it gets very interesting. So So let's just say moving forward, okay, we have this winning strategy and it does really well, again, depending upon the markets and what happens down the line. This is the kind of strategy you want. So if you know you have a high performing strategy, okay, and it works consistently month over month, what you can do then is you can use the AI. And let's say you do get to that account size to be able to say, okay, this is the strategy that will carry me in the high frequency trading world. So this little strategy is what brings in, well, we'll just call it life changing returns. Okay. And you would have other ones we can identify and add to it as well. And then we can run all kinds of AI against that with portfolio allocation and just getting really sophisticated as well. And then if you really want to go low level, like ultra frequency, you could do that. And I can tell you now, with some of the AIs that I've seen, people go, what about FPGA? You can do that. AI is very good now to generate FPGA code for you on the boards, on the FPGA boards. Okay. I think we're at that point now and moving into the future. So this is a very highly prized strategy. Booyah. Okay, back to the screen here. So there's those are some of the outlooks that we or outlook we can find and potential gems. Okay, and even though we have hundreds, thousands of bot trading strategies we can generate, we want to find those small subset that do consistently decent wins. Okay, and I think that was a futures only strategy. So that's a pretty rare moment. And that's when uh, Nasdaq is in a very volatile, unpredictable moment, and yet it's mean reverting. So that means that could be a very long term strategy to run if everything goes mean into like a range bound environment. Okay, so that's very valuable to have. Um, right, I forgot to also mention here. So here we have the strategies. We compile them into C++. Here, we can independently run them, or we can also run them as a batch. The thing here that's really exciting that I've not that nobody ever talks about is this. This is why I built that new site, the orderbookedge.com. Because if you know about order book and knowing all the highly liquid, high volume futures and options, but when you run these strategies, but you've got to close them out at the end of the day. AI is your sidekick that will help you analyze the logs of a strategy as it runs. You can do that and go into a chat mode to say, what do I need to improve this strategy? Okay. So as an example, let me just look. Yeah, let me just do this. This is where the excitement comes in, where a lot of the um, call them, I don't know. I don't know what to call these people that are all about indicators and just sitting around, just analyzing stuff like that. That we're way past that now. So we have here again, and I only recommend this for anybody that asks me about where to go for algo trading. This is where I point them, and it's a very good test for me. And I'm going to rant here again. Um, when it comes to people, where do I go to trade on all social media? I point them to this. And you know what? People are so freaking lazy that they'll see the price to it like 30, $40 or yeah, US dollars, $50, $70. That's too much for them. So they'll just say thank you, never hear back from them. Those are the people that will fail hard. Okay, they may get lucky, but as trading gets harder, because it's no longer strong momentum just by putting money into a market index, we're past that. So again, when you look at the pricing here on this stuff, this stuff here, what you're getting is working code in interactive brokers. Okay, so it's all in Python, ready to go, and you can reverse engineer this. But where it gets very interesting, is everything can be powered by AI. Like I said, you could use Claude Code if you can afford it, or if you want to go on the cheaper side, more affordable side. The GLM, as of today, is very good compared to uh, to Claude Opus or even Fable. I don't know, but that's very important to know. And you just go into the chat mode, okay? So if you're doing things like for career, okay, there's this one as well, and there's a pilot PDFs here. Same thing, but in here you're going to get a few extra PDFs, a few extra PDFs, okay? So you get a few extra PDFs, and that thing is geared towards career. Okay, people don't understand this, and you get these bozos on YouTube going "Blah, blah, 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 about you master C++, and you're good to go. No, 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 no. Every single high frequency trading company out there has different standards on what they're looking for when it comes to candidates. For example, Rentech, Renaissance Technologies, will only hire either physics, PhDs, or people, and will drill you to see how you solve problems. If you can do it well, you're hired. They don't care if you're a math wizard. They don't care if you're a C++ wizard. They stress on on problem solving. Jane Street's another set of criteria that they look for um, in candidates. You'll never know that from these so-called whatever you want to call them because they don't tell you, nor do they know what each firm is, what they look for in candidates. Again, when you go in the AI chat mode and ask those related questions, you will then get exactly what they're looking for. And maybe if you want to work in that firm, you can tailor your resume for that. Um, and the education and how they go into the recruiting. And the other thing is that a lot of these folks don't know. If you want to stay equivalent on the lower chain, making your 100, 200, maybe 3, 400,000 as a quant coder, and you're okay with that. But a lot of people want to go into quant research because they think it's more valuable. No, no, no. What's really the top notch, highest paid position is what's going to be called a systematic portfolio manager. They are into the million plus packages. So all the stuff that I've shown you on the strategies are exactly what you need to know about risk management, about max drawdown, about all the volatility, and then you can get down to the nitty gritty of the quant modeling and just reverse engineer everything. Okay, because when it comes to recruiting in these firms, what they do is you move up the chain among different levels in the employer. And once you start hitting the portfolio managers, they're going to scorch you. They're going to scorch you. They're not going to ask, oh, what, you have a pointer here? Do we use a double pointer or a single pointer? They don't do that. What they're going to test you on very quite clearly is here's a trading strategy. We're having problems with this trading strategy, and we don't know what to do to optimize it. How would you go about it? And they're going to put you in front of a whiteboard, okay, and problem solve with you. That's in the higher, later end of the recruiting process. If you can't do that, you're not going to go past 400,000 or 500,000. And that's fine. But if you want to be the all-star in these firms, you got to go into portfolio management. On top of that, as I've shown you with AI is going to eliminate so many of these jobs that the only jobs that are still out there is going to be systematic portfolio managers. So you have the single portfolio managers, 1 million, 2 million a year. Okay. And on average, last year, I believe it was Goldman Sachs in England. If you get one of those portfolio management jobs, the average at Goldman Sachs was £9 million. But if you want to even make more money, you go into the multiple portfolio management. That's where you start getting to pay the athletes at the 20 million, $50 million pay packages per year. So if you focus on that, which you should, you will make a lot more money to understand this stuff, not only to be able to reverse engineer the code, and the code is very secondary now, not even third, because of the AI and what it can do and generate. And now we're now doing it with C++, very efficient code. On top of with the math, you can generate all the research paper types of research papers with all the scientific notation, all that what you get from the trading shops, and generate that via AI. And some of the Chinese ones, specifically like DeepSeek, as an example, DeepSeek, probably one of the best Chinese models out there, is from the founders that ran a quant trading shop. Okay, So that's a good example of if you want to get into that, use DeepSeek or other very specific types of AI LLMs and providers for that, and they are get so good at it. It's no joke. But then you go, I can't do this. I can't get in these companies. Fine. Then you just do what we call a solo quant and learn this on your own and to build up those packages. But you want to focus on futures and options. End the story there. Rant over. Okay, so coming back to all of this. So just a highlight here at hftcode.com. Guess what? Prices are going to go up by 10 because it says the AI says, "Hey man, you should be selling this for 300 bucks, not 47." Okay, well, I'll do that. People go, "Well, I can't afford it." Well, it's not for you, right? So the thing is, strike while the iron's hot here before I jack up the price, not like double, triple. We're talking 10 times, okay? Because I know the value of this. And then you go, well, how are you going to get people to come in? You know what? You know what? Let me tell you how I know, okay? AI, AI also provides me a marketing plan to reach the people I want that are making load that will easily afford to afford this. And the AI consistently says, yes, this group of people can easily afford this and this would be highly valued. Okay, with the browser stuff, the front end I showed you, part of the design enables me to provide endpoints throughout all the different functionality. So if so I could do that as an option and the value of that's with a little firm or prop changer, I could charge up to 10,000 a month for that. Okay. So the only thing I have to do is to show third party verification. That's going to be so critical moving into the future. Okay. But with the C++ now stuff, I know this is what people want. I'll show you. Okay. So I've been running a little survey on my YouTube channel. Okay. And it's basically a simple question to ask, what do people want? Do they want their code in C++ or Python? It's not a huge number of responses, it's tiny actually. But I do know out of 18 votes, 61% of them want C++. Okay? They want C++, okay? And as I said also, go to here. I'll do this as well. Now, I've talked about the option chain data. Let's go over the pricing for Data Bento. Okay, that's pretty well everyone thinks Data Bento's awesome. Fine, but it's just historical market data. Option chain pricing. Okay, and I know the AI is going to kick in from Gemini. Oh, here we go. Um, so Data Bento 199 per month for standard subscription. Okay, so let's do this. Options on futures chain pricing. Let's see that because there's a big difference there. Okay, so now we're getting data from the CME Globex. Okay, here's the pricing. Data Bento. Okay, with the options. Here you go. Oh, I see you want to go into oh, you want to get option chain data bento, 200 a month minimum. Okay, frequently used data, frequently, very critical here, frequently. Well, you want to get into the higher end stuff, ideal for investment firms or institutional providers. $1,700 plus the license fees. How's that going to run you? Oh, I don't know, another couple of grand from the CME license fee. Oh, and a complete history going far back, 4,500 per month plus license fees. That's for option chain data. Okay, option chain data. It's that valuable, and that's not options on stock. We're talking options on futures. That's how valuable this stuff is, and that's with Data Bento. Okay, that's how valuable it is. So any person that doesn't get that, and they probably haven't gotten to this point in the video, which is fine, but this is where I say, go to your next shiny toy. Okay. Enjoy that one and don't blame me if you lose cash. Okay. But that's the value of option chain. Everything I have, I can give. But again, um, that is very limited in what I can provide through Rhythmic because in terms of service. So all that stuff will not get released unless I change my arrangement with the providers out there. All right, so there's that. Okay, so now you know the value of option chain data in the futures market. Alrighty. So that's it. I've gone over about everything here. Oh, let's talk about the website here. So this new one, orderbookedge.com. You don't have to be a coder here. Um, you can see here the pricing. Let's see here. I don't know if I get the pricing. So I'm subscribed. Um, yeah, I can never figure this out. Let me go into another browser. You can see it. Actually, you can't. But it's very cheap right now. So if you want to take full advantage of all this fun stuff with that site, get in on it now. Okay, this is going to go up 5 times. Five. Count them. We're going to make sure we make the point here. So 1, 2, 3, 4, 5 times the price. Okay, so everything's there, ready to go. We're pretty well getting close to what I want with this so-called trading system. And again, I'm not sure what the arrangements will be if I wanted to do API or let me explain what the plan is. So with that website, the orderbook.com, the plan is very simple. Um, I've shown you the C++ code. What I can do is I can get the AI to give you pseudocode. Okay. I don't want to get into the game of supporting people. That is a no-go. I'll never do that. Okay. But what I will do is if you get good at AI, building your trading system with what I showed with hftcode.com, and you get good enough and you're experienced enough, what I may do is provide the pseudocode for some of these winning trading bots. So you can feed that back into an AI and say, make a C++ thing out of this, make a Python thing out of this. So that can be your code that you can use to work off of to build out your own system. Okay, what I just showed you, as I said, 3 days to build out what I built. So you probably could use with AI something pretty sophisticated very quickly if you know how to prompt, you know how to prompt for the debugging, and you also have a very strong understanding and foundation of programming, namely more the debugging, because that's more critical. And the architecture you can kind of get away with some of these AI agent tools. And you don't want to go into agents as well because they get very expensive. Unless you go with a GLM, but I still think that will be very expensive to run 24/7. Okay. So that's pretty well it. So another long video. My apologies. Anyways, we'll leave it at that. You got the deadline now. I've shown you the new thing system. One last let me go back to the screen here. This is another important matter. Again, this is where the AI is very good. So I'm going to go into Yahoo. Let's give you a day's example. Uh, the which one? Copper. Okay, Copper. Now this is a good thing. If you get confident and you get confident by building out some kind of trading system to trade live money with in the thousands, say, and you get really confident it's capable of doing that. If you were following one of those pre-market things that I suggested, for instance, with copper, here's the thing. Timing is everything. Timing is everything. Okay. Timing is everything. Okay. So if you just put on a strategy and you let it run, okay, uh, there's another process you'll need, courtesy of AI, that I'll build in what I just shown you, where it will analyze the market by downloading data on what it's trading, and it will wait. So, for instance, if the market opens with a good rally, and it will say, okay, it's moving up, looks good, we'll put on some positions, and then all of a sudden everything tanks, you could have a higher, call it a risk manager, where If the markets tank, it will automatically close out your positions and then monitor all your trading bots that you're running. And when the market turns intraday, you can then go back in and trade and start trading again as it moves up, because that's a very critical step, I think, instead of being glued to a computer screen. Obviously, you would only do this when you have a lot of confidence in the markets. And I think I'm sure there's ways that we can use option chain data to see what's going on throughout the day based upon what we're trading, and then forecast as part of the risk to know when to either allow trading, increase the number of positioning, meaning the risk, and using all the option chain data to be able to say, hold on here, this is what it's predicting. Don't do this, or get out now while the markets are open. Close out all your positions or reduce the position sizing. So I want to build that as part of this overall system. But only I can do that for myself. But again, that's something that you will need to figure out using AI once you get to a point where you're building out a pretty good system. Okay. Um, yeah, I mean, there's a bit of work, but once you get to a certain point, 6 months, however long, depending upon your coding experience, you get to that point where you get very confident. This is the way to go. That's all I can say, no matter what the markets are. And as I said, I've shown you that um, mini, micro NASDAQ mean reverting, forming the way it is. That's probably a long-term champ out there as a strategy. Alrighty. So we'll leave it at that. Thanks for watching. Coming up to an hour. Hopefully you got to this point. And with that, what I've just shown you, I'll be leveraging that to do all my live trading now. And the last step is to build that little AI thing to watch the markets intraday as well. Alrighty. Thanks for watching. Have a good day.